everyone, Larry Leverentich from Ichimoku.co with the daily analysis for the S&P 500 for the trading day ending Thursday, February 13th, 2014. Well, the buyers have come into this market strongly for today's trading. In the previous day's trading there was some doubt as to whether the trend would be able to continue to the upside. We had a small bodied doji type candle, or a spinning top type candle, which is a candle of indecision, and following this very strong first time frame uptrend, there was a good possibility of the market making a lower high and a lower low. Now early the sellers did trade the market down through the low of that doji's candle, suggesting that there was a possibility of that change of trend, but then the buyers came into the market to close the market up above the high, giving us in bar chart terms an outside day, but also a candle that has closed up above the Ichimoku cloud, giving us a bullish breakout and a buy signal with Ichimoku. We also saw the market test down to the important support area at 1813, and I highlighted that yesterday as an area that we should be watching, and we did see price action rejected from there as evidenced by the shadow on the bottom, so the sellers lost commitment down there. The buyers have closed with control of this market for today's trading, and does suggest that we could see some decent follow through. One thing to watch here for is that we have a zone of previous support which may turn into resistance for this market. We can see the shadows on all of these candles as the market was trading to and just after the major high. So that support may end up turning into resistance, so be aware of that, and it extends from roughly from the high of today's trading around 1830 up to about the 1841-42 level. In terms of the Fibonacci retracement, we are in an expansive mode of that. We've traded through 100%, and we have a target here at the 161.8% level at 1836, which is within that zone that I highlighted. So we need to watch the market as it's trading around there. If we see the sellers coming in and a candle that finishes with the sellers taking control or weakness from the buyers, then there may be a possible change of trend associated with interaction with that Fibonacci level. In terms of Ichimoku, obviously now a bullish market in all three timeframes. We're trading above the cloud, above the Kijun-sen and the Tenkan-sen, so we're bullish in all three timeframes. The problem here is, however, that the Chikou span is within the corresponding price action, so it's not confirming the bullishness that we're seeing in all three timeframes, and really this is suggesting that, as we've seen quite often in markets in the recent past, we can get false breakouts, and we saw a false breakout to the downside here. We want to see some follow through, and we didn't see that. What we're looking for here for tomorrow's trading is follow through after this bullish breakout, and certainly a test up above this zone if possible. That would possibly take the Chikou span above the corresponding price action, giving us a market that is showing some decent momentum in the medium-term time frame and confirming the other Ichimoku indicators, but we just need to be a little bit wary of the indications that we're getting at the moment. The other thing to watch out for too is that the breakout here has been from a flat part of the cloud, and often breakouts from a flat part of the cloud can be false signals, so we do need to be aware of that. The thing to take note of here, however, really is the short-term dynamics in this candle. A very, very bullish candle. The buyers have returned very, very solidly. The sellers weren't strong enough to change the trend. They had an opportunity with this doji indecisive type candle, but the buyers have come back into this market strongly, and it is suggesting that there is a real possibility of this market trading higher. Now, if the market does come off, look to potential support at the top of the cloud initially around 1823, and then back down at the 1813 level. If the market trades through there, then the 1800 round number should provide solid support for this market.